Happy Tuesday, October 22nd. Hard to believe, but the election is only 2 weeks out. And even with that, the Dow, S&P, and NASDAQ all closed higher for the sixth straight week last week. So I actually want to talk a little bit about the fact that this comes as a surprise to many people. And because of that, I feel the need to really focus on the importance of perspective today. As you know, on my weekly market updates, I try to keep it a little bit higher, big picture. And I just returned from some international travel, and as many of you know who have traveled abroad, that does always tend to put a sort of innocuous lens on our domestic life, even with large and important issues like those that are at play right now. And it's interesting because there's really a great deal of discussion around the economy, obviously. And most of that sentiment, from what we hear and speaking with a lot of different people throughout the days and weeks, is that consumer sentiment tends to lean somewhat negative. For myself, and I know many of you, we certainly feel the weight to not get caught up in the noise. And so I am going to offer some insight as to why markets are doing so well and continuing to set record highs. So I hope this will provide perspective with reference to the stock market and our work specifically. So that being said, the timing could not have been more perfect because a very interesting thing happened last week that I feel went pretty unnoticed, and that is that there was a very significant birthday that happened. The bull upward market turned 2. Happy birthday, Mr. Bull. So since the bottoming, the S&P 500 index over the past 2 years has climbed almost 64%. And by the way, is still up 22% from its early 2022 peak. The NASDAQ, which is weighted towards technology firms much more heavily, and the AI revolution is even higher than that. As most of you know, this was certainly not broad-based across all stocks. Larger companies in the indices significantly outperformed. And many of you who have worked with us for some time have recognized that difference with our active management. So back to perspective, what has driven this bull market? And it's really simple economic fundamentals. So while the price for goods and services are still high, the rate of the price hike has slowed. And this has allowed the Federal Reserve to reduce the pace of their interest rate hikes starting in late 2022. And so the focus should really be on the rate of change rather than the price of what those goods and services are. And if you pay attention to what the Fed announces and discusses, it's that rate that has moderated significantly. And we even saw a cut last month. In addition, the economy is still growing, demonstrated by GDP and job numbers, which directly correlate to corporate profit, i.e. stocks. So the bottom line is that stable or decreasing interest rates and profit growth benefit stocks. So as we enter the next couple weeks and the last 2 months of the year, I know that most of you have many serious concerns that are not related to our realm of the world. But with reference to the stock market, of course, any number of factors could create unwanted volatility. We know from experience that market pullbacks are certainly inevitable, especially surrounding any short-term uncertainty. Yet today, the factors supporting stocks over the past year or two are still very relevant. And I want you to keep that in the back of your mind, particularly over the next couple weeks. And remember to remain logical, keep perspective, and that we're long-term investors, stay the course. But as always, if you have any individual questions, please don't hesitate to reach out.